All right, thank you everyone. Welcome to our first webinar of our offshore investment series. Tonight, we're joined by Scott Pickin. I myself am Gabriela Frias. I am the head of revenue for Wealth Migrate, and a valued investor, Howard Shogum, who will be speaking to us a little bit later about his experience with us. Just so everyone here who is in attendance is familiar with who we are here at Wealth Migrate, this is our customer-facing team. We have Scott, our fearless leader, myself as head of revenue, our two wealth consultants who I'm sure many of you have already had the opportunity to speak to or will shortly be hearing from, Alex Westhazen and Fritz Greuss. We have our client relations manager and KYC, Know Your Customer Specialist, Siska Damaskinos, and our client relations and KYC consultant, Ruth Coates. This group is essentially the group that you will be engaging with the most throughout your journey with us as a valued investor. Scott, if you can go to the next slide. Just to set the agenda for what we are going to be discussing tonight specifically is investing offshore. What does that mean? Why is it important for you as an investor looking to grow and diversify your own wealth portfolio? How to do it safely and simply, and next steps for investing offshore, specifically with a platform like ours, Wealth Migrate. With that, I'll hand it over to Scott to kick us off. Scott, all yours.
Awesome. Thanks very much, Gabby. One thing that I wanted to just point out is that we've actually got a live page that people can actually go to. Sorry if I just move along to it here. And this page is I'll put the link in the chat box for everybody. And it's a new experiment that we're doing. And basically what it'll allow you to do is you can literally go along, you can be part of the Facebook conversations, you can literally post in Facebook here, ask any questions. There's also resources down below, our offshore and breakfast, investor breakfast, our signing up to the platform, or even connecting directly with one of our wealth consultants. So if you've heard enough and you say, right, I want to go and talk to someone, you can go directly in. And then all the information around our offshore investor breakfasts are down below here, and you can even go and click and actually choose the city. However, let's get started. And as Gabby said, it's wonderful to have everyone online tonight. We are really interested. Whereabouts in the world are you coming from? We're fascinated in your different conversations and being engaged in the conversation. There's three things we're going to be looking at tonight: the why, the how, and the what. So most people, when they're looking to invest or invest offshore, they start with the how and the what. How do I do it? What do I do? And what we believe is very important is that you need to get clear on the why first. So for me, when you look at it, if you take it like a bullseye, again, most people are always out there and they're trying to go, what, how, and they get themselves into analysis paralysis. But the question you really need to be asking yourself is, why do you do it? What is it that actually drives you? Now, having helped thousands of investors from 66 countries around the world invest a couple of $100 million into real estate and other primary market assets around the world, one of the things that we found critically important in terms of why people actually invest offshore, and what is it that they're doing? What is the emotion that they're trying to create? And really for us, it's this here. It's the preservation of wealth. So no matter where you live in the world, whether it's India or China or South Africa or South America, generally if you're in the emerging economies, you want to look to invest in the first world from a wealth preservation perspective. The second is a plan B. Most entrepreneurs would always say they've got a plan A, a plan B, a plan C, etc. So in life, it's very important to have a plan B. The third is peace of mind. Now, how does this peace of mind come about? And we're going to talk tonight about Ray Dalio and diversification. But it's really important, if you realize that you don't have all your eggs in one basket, that you too can have peace of mind for you and your family. And the fourth, and the one that I believe is the most important, is freedom. Now, we don't care where you want to send your kids to school. We don't care where you want to invest, or whether you want to live in this country or another country, or send, or whether you want to invest in a project, a purposeful project, or the church. What is important is that we want you to be able to have the freedom to be able to make those choices. Now, I wanted to explain a little story around my own personal why. Now, this is a picture of me and my dad when I was 13 years old, doing my very first property or real estate project. And what was interesting is my father did what you were all taught to do. He went to school, he went to university, he got a great job, he worked hard, he trusted the financial industry, he invested, and yet when he died in 2005 on the 1st of August, he was broke. Now, I at a young age looked at this and I thought, well, hang on, that doesn't make sense to me. We're all taught to do this, and yet when I went and looked at the statistics, 94% of people would actually follow my father, and that was in England, Australia, or America. 5% of people would be called financially independent. And what's really interesting is that when you look at the stats, it actually means financially trapped. And that fascinated me because less than 1% of people were all running this race, and less than 1% of people were actually finishing this race. Upon further analysis, I actually found out that 49% of the world's wealth is held in property, and yet only 12.9% of the world's population has access to that property. And as I've said to you already, statistically, less than 1% of people will retire wealthy at the age of 65. We looked at that and we thought, what is the reason? And there's one reason and one reason only. And that's that the top 1% are investing in different quality assets to the rest of us. And we decided to use technology to allow everybody to be able to invest like the top 1%. Now, I want to share with you the 4 secrets to wealth. Now, this for me is critically important. There's a great book which I would highly recommend, which is called Unshakable by Tony Robbins. And he went out and he interviewed 50 of the wealthiest people in the world. And he ultimately brought it together. And there were literally 4 concepts. The first is don't lose money. Warren Buffett always says, don't lose money. And point number 2 is refer to point number 1. The second is asymmetric risk reward. So we've all been taught the higher the risk, the higher the reward. But it's actually the wrong way around. The top 1 is looking for high reward, low risk. So asymmetric means that it's opposite. The third is tax efficiency. This one is really important. And the fourth and most important comes from a guy called Ray Dalio. And I would highly recommend that you go and look up Ray Dalio. And he basically runs the largest hedge fund in the world. It's about $160 billion. He is worth $20 billion himself. His latest book is called Principles. You can go and Google him. He's got some wonderful TED Talks. And he says in these current times of change and uncertainty, the only thing that investors can do to succeed is to diversify. They have to diversify across asset classes, within asset classes, across markets and currencies, across time. And more recently, he's added another one, across partners. There was an interesting comment that he came out with in the book where he said, to be successful as an investor, all you need is 15 uncorrelated bets in an attractive array of assets that don't move in tandem, and that will reduce the risk by 80% and increase your risk return ratio by a factor of 5. Now, it's quite interesting because that sounds like a lot of gobbledygook to most people. And we'll be going into this at the breakfast in a lot more detail. But in simple terms, what it means is you need 15 good quality assets that don't move in tandem. That's it. That's all it's saying. And so the question you have to ask yourself is, how do you find 15 good quality assets in different countries, different currencies, with different partners where they don't move in tandem? And we've got a breakfast coming up. So we are a community-based company. We've built this entire company over nearly 2 decades on people and helping people actually get what they want in terms of where they're at. And because of COVID, we haven't had any live events, but we decided to hold a live event. Call us crazy, call us stupid. I believe a lot of people are looking for human interaction again. And so we'll talk more about this at the end, but we do have some live breakfasts coming up, one in Cape Town on the 1st of June, one in Johannesburg, Rivonia on the 8th of June, and one in Durban, Umhlanga on the 15th of June. And for those of you, as I said to you, we've got investors in 66 countries around the world, members in 158 countries. We will be looking to do it online for those that can't make it to the live events. So the next secret I want to share is the value chain of real estate. Now, this is one that absolutely amazed me. I've got all the degrees in the space, and I'm not saying that to impress you. I'm saying it to impress upon you. Because what I realized by helping very wealthy people invest from all over the world is that actually you can simplify it quite dramatically. When you and I invest traditionally, This would be you and me over here, and we would go out and we'd buy a house. Now, whether that's a house down the road or whether that's a house overseas, there are actually 60 different middlemen between you and your investment. And the problem is, and I'm being quite kind with only 3 or 4 on the screen, the problem is there's no trust, there's no transparency. And because of the high fees, there's low returns and no alignment. And this is why we already have the stats that I've mentioned in terms of what's happened over the last century or more. So the question is, what is the value chain of real estate? And if you understand the value chain of real estate, how do you go up the value chain of real estate? So it starts with land zoning. Now, depending on where you are in the world, I'm going to use Cape Town for now. And so 30, 40 years ago, you had Century City. And where Century City was, it was a big Air Force base and a whole bunch of derelict land. And so a developer came along and they actually land zoned it. Okay, so effectively they take it from greenfield site to brownfield site. Then a developer comes along and they actually build it. Now, in this case, the developer was John Raby, and he actually built Century City. So he built the shopping centers and he built all the commercial and residential building around it. The third type is the investor. That's where a number of high net worth investors come along and they actually own the commercial buildings. And once they've seasoned the rent, they sell it to a fund or a REIT. And then finally, you and I invest. So let's look at the returns of how this works. A land developer is generally looking for an IRR, and I don't have time tonight to explain that, but it's a way of determining a financial return of 30%. A developer is looking for an IRR of 25%. An investor is aiming for an IRR of 20%. A fund or a REIT is merely looking for a cash flow of 5 to 8%. And again, I'm actually being quite kind with 5 to 8%, depending on where you are in the world. And then you and I come along behind and we wonder why we're battling to beat inflation. So the question I have for you is that when you look at this, and I mean, this is a real life article, which you can go to my LinkedIn profile and actually go and read the article on how wealth is created in real estate, where you can actually see how in this article, the Billion Group, which was the developer, was selling all of its assets to a property fund, which is how they all make money. That's how they make money in property. The only thing that was really interesting was that the property fund and the developer were owned by the same people. And they talk about how this transfer of wealth was taking place and really how the investors who were investing through the stock exchange were not getting a good deal at all. And so if you look at this value chain of real estate, the question I have for you is, why don't you go up the value chain? Why don't you cut out the middlemen? Just like with Uber, you've cut out all the middlemen and you go directly to the person driving the taxi, or with Airbnb, where you cut out all the middlemen and you go directly to the person that is, giving you the accommodation. And why don't you cut it out even further and go directly to the developer? So you can either own a commercial asset directly, or you can invest alongside a developer directly. Imagine if you could invest alongside John Raby 20 years ago and build Century City and then become an investor and own the assets. Well, when I ask people all over the world why they don't do this, the barriers and the blockers are all the same. How do I protect myself? It's too expensive. It sounds too good to be true. I don't have access. I don't know how. Too much compliance. I don't have money. One that most people don't even realize, even if you've got money, I don't have access. The good deals don't come down my path. It's too difficult to do offshore. What about ongoing management and maintenance? My brother always talks about broken toilets. And that's just not what you want. None of us in this world want more hassle. If you're looking to invest offshore, it's hard enough to invest in property or real estate locally. But if you're looking to invest offshore, it becomes even harder. You've got to start worrying about tax, compliance, bank accounts, offshore structures. And you haven't even started to worry about the property, the management, the maintenance, and how do you collect your rent and everything in between. And because of that, because it becomes extremely difficult and complex, the majority of people tend to invest locally close to where they used to. And they break Ray Dalio's number one principle of diversification. So what did Nelson Mandela say? He said, money will not create success. the freedom to make at will. And what we've done with technology is that by changing it and by using technology, we are purposely transforming this space completely so that investors can now move up the value chain and they can get a far better long-term return on their capital in a safer and simpler way. Let me explain it to you. Just like I've already explained, you go up the value chain. So you invest in an income producing asset. So as an example, you could go, and I've been using Century City all along. There could be an income producing asset there. Let's say it's the building that's owned by Vodacom, and Vodacom is the tenant, and every month or every quarter, they are actually paying rent. That is an income producing asset, and you invest alongside it and you earn a quarterly dividend. Or you go further up the value chain, there's more risk because you've now got development risk, and you only earn your money on the back end of the development, but now you invest directly alongside the developer. So in this case, you invest directly alongside John Raby when he built Century City. That's the why. We've really tried to impart upon you in this webinar why it is so important to be looking offshore. The one thing I will say as I hand over to Gabby that's also important is right now the timing is really relevant. There's good assets around the world with great income potential, and the Rand is very strong at the moment. And what I found really interesting, having helped people invest for 17 years, is they tend to wait until the Rand is really weak, and then they panic and react when they invest. But I've learned from wealthy people that the true wealth is held by being proactive, taking advantage when the Rand is really, really strong. And the advantage of that is that you can now get involved, you can start to grow and build your global portfolio. So that's the why. Gabby, over to you to explain how to do it.
Great, thank you so much, Scott. Looking into, firstly, how does this work? Scott touched on it briefly just now, but what we do is we work directly with sponsors or real estate developers who are creating and overseeing these investment opportunities. Often that's in the form of a building or the form of a structured note or a debt product, but these are actually the industry experts that have the background, decades of expertise in actually putting together and managing a successful commercial real estate development opportunity or successful, in this case with Cashbox Global, structured note. What we do is we then put those offerings onto our marketplace, and we listen to you, the investor, to hear what types of returns you're looking to receive, general types of classifications of returns, if it's income producing, if it's capital growth. We also want to hear how you want to diversify your portfolio, and we feed that directly back into the investments that we present to you. So as the investor, you have that opportunity to actually be a part of this, this demand discovery process with us, and then take advantage of what we put in front of you on our marketplace. And investing on the marketplace is extremely easy. You simply need to sign up, complete your profile, fund your wallet, and then you can get to diversifying and growing your own wealth through alternative investments like ours. And that is essentially what our platform aims to offer you, is that elegant global solution to creating access for yourself to true diversified wealth. You can create your profile in minutes, your portfolio dashboard, property reports, and all new deals that we offer are accessible on our marketplace whenever you want to access it. We work with quality global partners and offer only premium investment opportunities. And I'll speak to both how we select our partners and how we select the deals or the investment opportunities that we present to you just a little bit later in this presentation. As Scott mentioned, we also try to make this as accessible as possible. So you as an individual investor can invest offshore for as little as $1,000 US, and in some cases, even as little as $100 US, depending on the deal and where we are in our investment raise cycle. To be able to do this, there are generally no hassles, no management issues. We're not going to expect you to set up complex global tax structures or open separate foreign bank accounts. We do all of that work for you. So it's genuinely easy for you to create that true global wealth that you need. Our online wallet system holds all of your uninvested money, and all of your returns or distributions received from the deals that you've invested in go straight back into that online wallet system. You can withdraw your funds easily or reinvest your funds to take advantage of some compounding returns. But really, we just want you to focus on achieving the best returns available in the global market today through the deals that we offer you on our platform. So as I mentioned, signing up is quite easy. So as an investor or a potential investor, if you're looking to get started, you just need to follow these 4 steps. And I'll break it down very quickly. If you go onto our website, wealthmigrate.com, you'll see in the top right corner that button to sign up. Once you click that button, you'll be taken to the platform sign up page. Agree to all of these terms, which are very simple, just essentially saying that you do want to be contacted by us and informed when new investment opportunities arise. We'll ask you to select your current country of residence and to self-select your investor category. Do you consider yourself an everyday investor? Do you consider yourself a high net worth investor or an accredited investor? We have details on or definitions on what each of these investor categories is for you to best self-identify and select. Once you have signed up to the platform, we'll ask you to just verify your account, complete the basic information in your profile so we know just a bit more about you. All of our investors do have to go through what's called a KYC process, or Know Your Customer process. And this is where we'll ask you to upload just some additional identifying documentation so that we can ensure that we can appropriately and compliantly support you and serve you as an investor on our marketplace. Once that's done, simply fund your wallet, and all of these steps are explained as well in the Investor Quick Start Guide, which we'll give to everyone as a resource, and also available as steps to follow on the marketplace itself when you first sign up. But once your wallet is funded, again, very simple. Just go to the marketplace deals, select on the deal that seems best to you, read over all of that detailed information, and then just click invest. You can see that here from this quick profile. I invest $500 into a deal in Portugal in less than 2 seconds. Simply agree to all of the subscription agreements, submit, and make that investment. So a bit more on how we select and designate our sponsors. Each of our sponsors is assessed against a range of criteria to determine their quality and tier in the marketplace, and if they're a right fit for us and what our investors are looking for. You'll notice on our deal cards that we actually indicate to you who the sponsor is. And again, the sponsor is the individual, the organization that is putting together and creating this investment opportunity for you. We tell you if they're tenured, how many years of management experience they have under their belt, how long they have been operating for, and what their standard AUM or assets under management is. And we do this to be as transparent with you, the investor, to fully understand different components of risk, both within the deal itself and with the sponsor who is presenting the deal. We also select and designate our deals based on risk categories. These deals are located in the United States, in the United Kingdom, in Europe. Historically, we've also offered deals in Australia and South Africa. All our risk categories are determined based on that risk-reward ratio that Scott mentioned as well, but they are various real estate asset classes, real estate like medical, residential, and industrial. And if the risk is high risk, high reward, it's an opportunistic risk rating. If it is a mid-risk, mid-reward, it's a core plus risk rating. And if you see it's a low risk, low return, or low reward, it's a core plus. And these are the core risk profiles are considered the most stable, consistent, consistently performing types of deals that you can invest in. So we really try to educate you as the investor on what we present on our marketplace to you, so that you can feel fully confident in the investment decisions that you're making on your profile. We do extensive extensive due diligence, and we operate in a completely compliant and regulated environment, both in South Africa and in the UK and in EU. As an investor on our marketplace, you can be rest assured that we do quite extensive due diligence on our sponsors. We are beholden to completing a regulated KYC or KYB process, as I mentioned earlier. We do extensive due diligence on all of the deals that we offer. We also make sure that your money is protected and safe and held in a compliant way for all of our clients. We handle all of the structure, setup, and reporting for every single deal that we put on our marketplace, and we are and a plethora of other services, as you can see here. So with that, at this point in time, most people then ask us, how does the fees work? How do you cover all of this and still kind of are able to cover this overhead and be an effective and successful company? And the reality is that we do charge fees. We charge fees in the form of initiation fees and profit share fees. But these fees cover the cost of developing, maintaining, and securing compliant structures and processes for the deals that we put into our marketplace. And they're generally a much smaller amount that the investor pays through the life of a deal than if you were paying assets under management fees for a family office or to your financial planner. We are extremely transparent in our fees. So these are really the only fees that you will ever expect when investing in a deal on our marketplace. You can see here for every deal that we offer, we do charge a 3% initiation fee for whatever amount that you do invest on the platform. And that initiation fee is covered in the form of platform services, structuring services, and investor acquisition and marketing costs. And then at the end, when you start receiving returns, you'll notice a profit shares fee. And this is based on returns generated from investments you have invested on the platform and includes dividends, interest, and any capital gains. And Wealth Migrate takes a small 10% fee off of those returns. So again, going back to how this works and how you as the investor are impacted, I'll go through this process fairly quickly. If there are any additional questions, please feel free to reach out to myself, to Scott, to any of our wealth consultants to learn more about the specifics of this. We'll also talk more heavily on how we are regulated and how this process works in the next two series of our webinar, both on being tax efficient and understanding how we structure our deals, and on compliance and regulation and how we receive that certification. But essentially, we source commercial investment opportunities from world-class sponsors. We put those opportunities in front of you, the investor, to browse on our marketplace at any given time. You can then invest in those deals directly on the marketplace. And what Wealth Migrate does is then aggregate those investments. We essentially pool those smaller investments. Let's say 10 people invest $10,000 each. We'll pool that $30,000 together and put it into a special purpose vehicle, or an SPV, which is a legal company or structure that's set up just for the purpose of that specific investment offering. Once that's done, we then submit that SPV directly to the sponsor, who then puts that money to work for you. And as the investor, the sponsor runs the asset for the full length of the deal or the term. The sponsor pays those quarterly dividends or annual dividends, distributions, returns directly into the SPV. And Wealth Migrate then distributes that to all investors that were a part of that special purpose vehicle or SPV. And once a deal is exited, capital is also returned to all investors through that route. And as I mentioned earlier, all distributions are paid directly into your digital wallet for you to access and withdraw, or use those funds to reinvest in other deals on our marketplace. Now, just to talk through what we have on our marketplace at the moment, we actually have a wonderful opportunity in Marvila, Portugal. This is a deal that is located just outside of Lisbon, about 15 minutes outside of Lisbon. And we have two different ways that investors can take advantage of this opportunity. Scott, I'm not sure if you also want to pop on camera and be able to speak to some of these points, but we do have an option to invest through a hybrid of both a capital growth and income returning investment opportunity, as well as a capital growth only play. Scott, do you want to speak to this at all, or?
Yeah, look, I think it's really quite important what you're talking about here, Gabby, because I mentioned earlier about being able to partner alongside John Raby. You know, the gentleman's been in the industry for 40 years, as you know, most people in South Africa will know where Century City is. He's then partnered with a massive property group out of Switzerland and Portugal. And they actually have created a company called Reward Properties, and they've now done 3 developments and they've got another 2 in the pipeline. What this allows people to do is to participate alongside them. For every euro that you put in, it's treated the exact same way as the euro that John Raby's personal cash is put in. And you've got the opportunity to invest either as an equity partner, where you're in the development stage of the business and you're investing, you take on the development risk, but you build with them and you make your money on exit. And or we've got a hybrid, which is a combination of equity and mezz debt, mezzanine finance, where you actually earn an income through the journey, the lifetime of the investment. So really it allows you to participate in Portugal. Portugal is one of the 4 top performing residential property markets in the world. It's really interesting when you look at supply and demand. I always believe that one of the most important things you need to look at is population growth. And with the likes of COVID, more and more people are moving to the likes of Portugal. It's got a strong economy. It's one of the better performing economies in Europe. And a lot of people are moving there because of the quality of the education, the quality of the medical system, and also because the lifestyle is more affordable and obviously better weather. So it's really quite interesting. This is very close. You know, it's in Lisbon. It's right on the river there. So good location. It is in one of the growing up and coming, they call it gentrification areas. And so there's got good potential for growth as well. And yeah, I think it's just a classic example, Gabby, of in the past, investors would only have had the ability to buy a retail unit from the developer, which is at the end of the value chain, whereas now you can go right up the value chain and participate alongside the developer.
Yep, exactly. Thank you so much for that, Scott. Touching on a recently funded note, so we offer commercial real estate opportunities predominantly on our marketplace, but we also are now offering structured notes. It's an alternative investment form. Scott, do you want to speak to the BBVA car manufacturer structured note that we recently funded?
Yeah, perfect. When you go to the platform, you'll see that you've got real estate and you've got alternative investments. And what we've done is listen to our community. More and more of the investors are wanting not only real estate, but other primary market investments. We've got structured notes, we've got private equity, we've got convertible debt. We've got a venture capitalist opportunity that we did about 3 months ago. And we're even bringing alternative green energy in. This particular structured note is with a company called IDAD. They've done over 1,000 of these transactions in the last 20 years. And it allows you to participate in the stock market. It is backed by one of the top tier banks. And what really happens with regards to this is that this has no capital growth, but it allows you to get income. So you can actually see here that the quarterly income here is 3.32% per quarter. So you're looking at over 12% here is what's being earned on an annual basis, cash on cash, which is really, really aggressive when you consider that that's in US dollars. What they did is they looked at the 4 major car manufacturers. Last year, the tech stocks completely took off during COVID. And now what they're looking at is the more traditional industries where there's the potential for growth within these industries. But specifically within the car sector, they're looking at the advance of the electric cars and the impact that they're going to have on the industry over the next 5 to 10 years. The purpose of this webinar is to give you an overview of the entire market and how to do it. We can't go into the detail of each and every product, but you can go on the platform, you can read about it, you can watch a webinar that's specific to any one of these projects, or better still, you can come to the breakfast and learn about each and every one of them and speak to one of us face to face.
Definitely. Thank you, Scott. Just to touch quickly on some of our most recent partners, we obviously highlighted Reward Properties and Cashbox from recent deals that we have had. And also this past quarter, we've had deals from Feldman Equities located in the United States. We have a upcoming office opportunity located just north of Miami that is going to be on our marketplace very soon for our investor community to get a hold of. And also have partnered with the McFarland Group, which is a senior living investments and assets firm, industry experts in their field. And we're very privileged to have been able to offer a specific senior living fund through them in the past quarter. So Scott, I think this brings us to,
So I'm going to steal back the slides if you don't mind. And what I think is really important here is that when one looks at it, what Gabby shared with you, and just by the way, what she shared with you is just over the last couple of months, some of the partners. I sit on the investment committee, and there's also some good deals coming, some industrial opportunities, some other opportunities in other markets, other currencies. So, really one of the things that we're learning more and more with our investors is follow the steps Gabby said, go online, get your KYC done, fund your wallet, because then you get to be able to take advantage as and when they're ready. Whether you want to invest in America, England, Europe, Australia, or even South Africa, you no longer need to choose. You've got everything all in one place. You can manage it without the hassle or the complexity, and just really with simplicity and safety. It all comes back into one digital wallet. It's your wallet. You're in control of your money at all times. It's protected by European law, and one of the top 5 banks in Europe actually holds your cash. We merely facilitate it. We do not touch your money. Whether you want to invest in medical buildings in Atlanta, and these are actual buildings that people have invested in, you can see 8% cash on cash return, IRRs of 13 to 20%. We've been doing this now since 2013, so we've got quite a significant track record of actually seeing how these partners perform. This was a medical building in Texas. This was a residential apartment in the UK. Again, we didn't try and buy one apartment. We bought the entire building. This was an industrial opportunity, which was in Australia, or even commercial opportunities, which are in South Africa. So you can see, again, back to Ray Dalio, diversification across countries, across currencies, across assets, and even across partners. And if you think, wow, this sounds too good to be true, and am I the only one that's actually participating in this? We've actually got members in 158 countries. We've got investors in 66 countries. What's the difference? An investor is someone who's actually physically invested in a deal. We've done just short of $600 million through the platform. If you take our Chinese partners, we've done well over $600 million. We've had over $100 million actually invested. We've paid out $8 million in dividends. And you can see that we've won a number of different awards through the process. But I always believe that one of the most important things is not to hear it from us. And I asked Howard if he wouldn't mind joining us. Now, I met Howard and Amanda many years ago. And Howard, I don't know if you remember these pictures, but this was us on our buyers trip many, many years ago in America. And you can see the first picture there where we're in front of the bulls. I need to move that picture a little bit over. This was in Atlanta with RJ. This was in Memphis with the team in Memphis. And this was sitting in the bus. You can see Howard and Amanda there in the bus, actually on the buyers trip. And Howard, I just wanted to ask you, it's been a long journey for yourself. You're an experienced property person on the ground in Cape Town, South Africa. I remember when we were walking around these houses with owning your own construction company, you're giving advice to people on what it would take to renovate. But let's take a step back first. Why did you even want to start looking overseas, compared to investing locally? You just need to press the, Howard, you just need to unmute yourself there. I'll try and unmute you if I can. There we are. Oh, hang on. Hang on, you're still muted? I think I might have muted you. Howard? Can you just unmute yourself? Yeah, there we are. We got you.
You got me?
Yeah, perfect.
Hi, how are you, Scott?
Yeah, wonderful. Lovely to see you again, and thanks for coming online.
The reason that I initially wanted to invest in America was I wanted to earn dollars and live in rands. And when you go overseas and you see just how weak our rand is, 20 to 1 in Britain and 14 to 1 in America, you'll understand why I wanted to do that. So a rand hedge was one reason. Secondly, I wanted to diversify to different economies. And thirdly, having all my assets in a third world economy, I wanted to diversify into a first world economy. And those were the main reasons that I started looking offshore.
And how, as a matter of interest, with yourself and Amanda, once you started looking offshore, how long did it actually take you from an initial idea to actually being able to find a way to be able to take action?
I had been looking for about 3 years. After the first year, I actually attended one of your conferences that you had. And then I followed you for for 2 years from then. I wasn't sure if you were trustworthy. And that was it. I met you firstly in 2011. I only began to trust you in 2013. In fact, I'd been to a number of your conferences myself. And then in 2000, or it must be in 2000, end of 2012, I asked my wife to come with me. And I said, just give me your gut feel. Is this guy a genuine guy? And she came, and when we walked out, she said, you can invest with him. And the next day I picked up the phone and I phoned you, and we set up a meeting and went for coffee.
I actually remember that, believe it or not. It was by the lighthouse there in Milnerton.
Correct.
And Howard, in terms of, you've watched this evolution of, you've done exactly what I did, which is, as per those pictures, we flew over to America, we traipsed around all the different cities. When we went on those buyers trips, we would often look at 20 houses a day. And then we had to set up bank accounts, and we had to set up LLCs, and, there's tax, there's compliance, there's structures. I don't think people, or certainly people that haven't done it before, I don't think they understand the complexity that's actually involved. Talk to us a little bit about your experience of actually buying, I'm going to call it the traditional way when investing internationally, with the bank accounts, etc.
Okay. First of all, we went overseas for 11 days. We went to 4 states. Scott nearly killed us. To keep up with Scott is not easy. He gets up early in the morning, put us in a bus, and we, as he said, we must have seen 20 properties a day. We would then get home, and as we get out of the bus, he says to us, you've got 10 minutes to have a bath, clean up, get back in the bus, and we're going to meet one of the partners. And then we'd get home at about 12 o'clock at night, and Scott would go off to work. I have never, ever seen anybody like that. Energy is unbelievable. When you get to another country, you don't, and you've never been there before, and you don't know the country at all. First of all, you have to choose a state. And to choose a state, you need to know whether it's tax-friendly state or not, whether some states in America are landlord-friendly, some are tenant-friendly. So it's very difficult to actually choose a state. Once you've chosen a state, you need to choose an area. And once you've chosen an area, you need to choose a street. And then in the street in America, you need to know the right side of the street, because if you choose the wrong side, your children can't go to a good school. And this information is very difficult to ascertain in a short period. You need to go, or you need to deal with people who actually understand the country that you're investing in. We then had to open bank accounts, and many banks didn't want to open our account. Some of the banks closed our accounts once we were back in South Africa and sent our money back to us without even telling us. Then you have to look for finance. No bank in America will finance you unless you have a social security number. Scott managed to organize private finance for us. You then need to find an accountant, a lawyer. And most important of all, you need to have a very good property manager, because you're too far away to micromanage your property as I would do in South Africa. Over there, you have to 100% trust your property manager to spend your money on repairs and do everything for you, select your tenant, etc., etc. And it is a very stressful, and it is extremely difficult to select the right property.
And tell me how, having watched the evolution, and I know you've been part of the journey right from the beginning, when you see Gabby and the screenshots that she was doing, and again, at the breakfast, we want to spend more time, or if people want to sit with our wealth partners one-to-one, but it blows me away that you can now invest in America or Portugal or England or Australia, and you can do it in under 60 seconds. On the assumption you funded your wallet, you can literally do it in under 60 seconds, with everything done digitally, all managed in one place. You don't have to worry about the tax, the compliance, the structuring, the banking, anything. How different is that for you compared to your experience 7-8 years ago to now what is possible for new investors, if you want to call it that?
Firstly, I'd like to say that in 2011, when we were 2013, sorry, when we were in America, at night, Scott was actually starting to work on this program. It was a bit less sophisticated, but he has been busy with this idea for the last 10 years. Today, you don't need to do any of those things. You don't need to go to the country. You don't need to select a bank. You don't need to get finance. You don't need to have an accountant, a lawyer, or a property manager. Wealth Migrate basically does that all for you. So you can literally sit in your office with your computer, go onto your screen, look at the offer that's being offered, decide if you want to invest in it, and with a click of a button, you invest in it. It then gets managed for you, and you get your dividends every quarter. It's absolutely simple compared to what it used to be.
It's so interesting how it, I tend to, it makes me feel old when I have these conversations, but when investors of the future invest, they'll be like, what? You did it the way you just described beforehand? And it'll be like, wow, that doesn't even feel natural anymore. But look, I really appreciate, you coming on, Howard, and sharing your experience. You and Amanda have always been an amazing part of our community. And I just think there's so much value for those that are listening. Like you said, it took 2 years to build trust and to come online and to educate yourself and to come to live events. And that's what you experienced is not different from any other investors. People's money is very important to them, and they want to make sure that it's being looked after. And that's why, we just really want people to be able to meet real people and hear real stories. And I really appreciate, you sharing it. And it's not all good at the end of the day. At the end of the day, this is a partnership, and investing in business has its ups and downs. But I learned a long time ago that you're only as good as the quality of your partners, and you want to make sure that you're aligned with them long term. Any closing thoughts from your side, Howard, to anyone that's sitting in that situation like you were back in 2011, wondering what to do next?
Well, in 2011, as you know, when I first met Scott, I didn't trust him. After 10 years of working together, he's now become a friend, and I trust him completely. I can highly recommend Wealth Migrate. I can say that without any doubt whatsoever. I know that if you invest with him, Scott and his team will go the extra mile to make sure that your investments are successful. And Scott, if you want to give my telephone number to anybody who wants to invest, who wants to talk to me privately, I would be happy for you to do that.
Awesome, Howard. Well, thank you so much for coming online tonight. I really appreciate it. And hopefully we'll see you on the roadshow in June in Cape Town. I think we might have just lost Howard there.
Looking forward to seeing you.
There you are, brilliant. Awesome. Well, thank you very much. I'm going to wrap it up now. And I have to say, the one thing about digital that I do miss is these wonderful experiences. So many happy memories were created on these buyers trips. And maybe, Gabby, it's an excuse just to redo them again because it was lots of fun. But what I want to do now is just finish off with next steps. And you've heard a lot from Gabby, myself, and Howard today. You've heard about the why to invest offshore. You've heard the how to invest offshore. Now it's the what. What are the next steps? The first thing you can do is you can come along to an investor breakfast. If you actually are in South Africa and you want to come and meet us face to face, you want to come and learn from us, you want to actually shake our hands and look us in the eye, these are the dates. What are we going to be doing? We always do a 4-hour session. We've done this hundreds of times. And the reason being is that what we find is that most people in life, their time is their money. Their time is their most valuable asset. Their future and their freedom is their most valuable asset. So rather than rush in and rush out, rather invest half a day of your life and get quality and walk away with a plan. So in the morning, we do a theory session. There's 10 important reasons. We go into a lot more detail, how you can invest in property in England, Australia, America, Europe, South Africa, and to build a global portfolio. We'll go deeper into the 4 secrets of wealth. I skimmed over it tonight. The ultimate secret, so that's the value chain of real estate. And again, specifically in residential and commercial, and all the secrets that we've learned, but more importantly, the mistakes that you can avoid. How to understand risk. I don't think there's anything more important. How do you understand risk and actually manage it? How do you choose the right countries, the right partners, and the right deals? What are the key strategies to becoming a global citizen? I get asked virtually every day, how can I get foreign citizenship? And what does it mean? I literally wrote the book, which was endorsed by Clem Santa back in 2014. And I analyzed 16 countries on where you can get citizenship elsewhere. And I'll share with you what I learned. How do you manage structures, bank accounts, taxes, and processes? And in simple terms, make it safe and simple. How do you create your own personal investment plan? I'm sick and tired of someone giving you a plan. What's your plan? How do you make that plan? And whether you're starting with $1 million, $10 million, or $100, it's your personal plan and we can help you make it. What is Wealth Migrate? How does it actually work? What are our fees? How do we make money? Gabby's already answered that to some extent. How is it safe? Let's go back to risk. And also, what regulated environment? You'll be glad to know that we are fully regulated in South Africa. How to invest, create the life you want, and have a purposeful impact on the planet. So this for me is all about the keys to your freedom. And it's not only about profit, but actually about purpose. And then in terms of, we'll have a break for breakfast, and then that's the theoretical session done. Then we'll go into the practical session. We'll work with the platform. You'll understand all the investment opportunities and how we manage risk on the platform. We'll work through the models so that you can create your own financial plan. And then we'll go into a Q&A. And we actually find that the session post-breakfast is the most valuable session. People get the most value. If you are interested, literally go to the landing page and the link. And Gabby, if you wouldn't mind just putting it back in the chat box for everyone. It is the landing page. It's got the YouTube, so you can watch the recording to this webinar again. And then all the resources are below. Go and chat with one of our consultants. If you want to, our wealth consultant. Alistair is actually sitting at the moment in a separate Zoom room. If you want to go chat to him, go and sign up to the platform. Go and click on the information for the more information for the breakfast. You can go read all about it, all the information I've just shared, and you can even go in and actually book for the different venues. It's all online. And if you're watching the recording, you too can go and to this landing page. And then we'll close out around lunchtime. And my philosophy is that don't just come and get the theory, walk away with a plan. Imagine the peace of mind you'll have, after at the end of the day, when you actually know that you've got a plan for you and your family. So one thing I like to share is how to become a global citizen. And for me, the essence of that breakfast is how to do it. We've helped thousands of people do it. We've helped thousands of people immigrate to other countries. I'm not saying you want to immigrate. I have a British and Irish passport and I choose to live in South Africa. I'm not saying you should move, but what I do believe is that you should become a global citizen, which allows you the freedom of choice to decide where you want to live, where you want to invest, where you want to send your kids to school or university. And more importantly, as Howard very eloquently said, there's nothing better than owning first world assets with a first world income and living in a beautiful lifestyle. If you want to speak to one of our wealth consultants, this is Fritz's details. This is Alex's details. Reach out to them. We are a technological platform with a human heart. Talk to us. We are human beings who like to have a conversation. And in conclusion, we have a dream that the only way to solve the wealth gap is to enable each and every one of us to be able to invest like the top 1% using technology. We call it smart investing, and our ambition, our purpose is to put smart investing in every single person's pocket. And we invite you to come on this journey. We invite you to come to the breakfast. We invite you to come online. We invite you to have the conversation. And if you're not in South Africa, remember with COVID, it's quite hard to travel. We are going to be doing online events where we'll be going into more detail. And so, Gabby, that is all from our side. I know that if people have any questions in terms of the Q&A, I don't know if you want to bring up the polls. If there's any questions, and we can run through them basically. Where are the polls? Oh, sorry, I must do the polls.
Yeah, we had a couple of questions that I've already addressed privately in the Q&A box, but just a lot of questions from some eager community members asking how to reactivate or activate their accounts, where to find your book, asking for clarity on some of the terminology that we use. But I have to say I'm very appreciative to those individuals for reaching out. And of course, you can contact us here. We're with you for the next few minutes. But the best way, I think, to have your questions more holistically answered is to get in touch with us, signing up to the platform, contacting us at invest@wealthmigrate.com to be in touch with a wealth consultant, or support@wealthmigrate.com to be in touch with our customer relations team. But we cannot wait to meet you both online and in person during our tour this coming June. And thank you so much for your time and attention tonight. We hope to see you next week for our second part in this series on tax efficiency. We will have a special panelist there from Tax Consulting SA. They are a premier tax consulting firm. They even capitalized on being called that. Tax Consulting is their actual LTD name, and very well known within the high net worth tax space for providing extremely valuable tax advice and assisting some very valuable clients, some of whom we're lucky enough to call our own. So yeah.
And then the week after that, we've got the regulation, the compliance, the due diligence, etc. So we really are, we've got a plethora of good information this month so that people can get access to it. And then next month we go deeper with the intention of, wanting to meet people face to face and really share in detail what we can do. The one thing I would finish off with, Gabby, which is really important, is that the overwhelming thing that we are trying to achieve is trust. And the reason that we do these webinars and that we share them so widely is that the number one thing that people need to be able to build trust is to get the education themselves so that they feel empowered to be able to make the decisions. And that's why we do these webinars, so that people can get those education and make the decisions for themselves. So really appreciate Howard, you being online tonight. Gabby, thank you to you and your team for everything that you've put together. To the community that's online, whether you're live or watching the recording, we really appreciate it. I fundamentally believe that we can solve the greatest challenge on the planet, which is the wealth gap, by allowing everyone to invest like the top 1%. And if we all invest like the top 1% and get the returns like the top 1%, it's going to have a meaningful and measurable difference on all of our lives individually, yours and mine. And that's something that I get excited and get out of bed every morning to make a reality.
Great. Thank you so much, everyone. Have a wonderful evening, afternoon, morning, wherever you are in the world. Cheers.
Cheers, everyone.